in minor things, but I do want to make a mention of this. There are a lot of other types of trading you can do from a laptop while you're on the road. You can do this from your mobile phone. I would say this type of futures trading is not going to be very conducive to this type of environment, right? So don't be tempted to think that you can do this from a coffee shop or things like that. Okay, so you must have fast broadband without latency, no satellites. If you trade off a technical trading system, you must have a fast workstation with lots of memory, a decent graphics card. If you trade off a technical trading system, you must have, I would say, 2 monitors. Now, most laptops actually do support a second monitor. I can't think of any laptops that are built these days that don't support an external monitor through HDMI or something. So most decent laptops will do this these days. So you're not only watching the price, you're watching multiple time frames, but also market internals, perhaps other markets, maybe you're watching other strategies. There's a lot going on. You need the real estate. I know of some professionals that can trade off of an iPad with futures, but these are typically quants, right? They're just looking at numbers, they're looking at their deltas and just trading futures off of them, or maybe they're getting some kind of a read that the market internals are turning down, and they just want to get short or long. They just want to get short or long, and they don't really particularly care about what the chart is showing. But if you're using a technical trading system, you're using charts to make decisions, it's almost as tough as running a video game on your video card. So the system that we'll discuss today is more technical in nature and generally will require more screen real estate. Hey guys, I just want to say this one more time, is that I cannot take questions during the presentation. I have to wait until the Q&A section at the end of each section, all right? Otherwise, it's going to take us hours and hours and hours to get through today's session. So if I stop for every question that goes into the room, it will take us a long, long time, and you guys don't want that. I know you don't want that. So I'm going to keep motoring on, and I will take your questions when we get to the break time. There's a lot of breaks that I've factored into today's session. Okay, so you need to work with me on this. We can work together. We could get to the end in much quicker fashion, all right? So the actual transaction speed, so people get hung up on this transaction speed, like, well, you can't compete with the institutions, right? These guys have all the advantages. Look, we're not doing HFT. We're not doing anything like that. We're just kind of, think of ourselves as that remora that attaches itself to a shark, and we're just trading along with the larger trend. So be careful of brokers that hold orders on your workstation instead of on the broker's server. I had this happen to me several times in the past where I would be holding an order on my workstation through the software, and the order's managed on my workstation. And I'd either lose connectivity, the workstation would freeze. This is back in the 32-bit days where we're on Windows XP or some type of beta of Windows 7 or something like that, right? We were stressing out the machines. We could only address 4 gigabytes of RAM, those kind of things. I mean, it was just, these were tough days because we were expecting more out of a workstation that it could deliver. And all of a sudden, you'd freeze up in your workstation, and you have a naked contract or two running around out there with no management because your workstation's responsible for managing it through the stops and limits. And it's running around out there. That's an unlimited risk position that you have. And so you would have to dig up the phone number for the broker, call them up, call up the trade desk, somehow dig up your account number, and say, I've got a position that I want you to close right now. That's no fun. So I would say be careful of this. Watch out and understand how your broker actually works, where the order is held. If it's on the server, you're good to go. It makes it so much easier. So speed, stability, and being able to process lots of information are going to be paramount for success for you. Don't forget, this is an athletic pursuit. Being able to make clear, correct decisions in the minimum possible time frame is necessary for success. This is no different than sitting there drilling on something like a golf shot or a baseball swing. It's no different. It's repetition, and this is something I'll bring up again and again today. Repetition is so necessary for success. But you've got to have the view. You've got to have the tools. There's no way you can compete in this arena if you've got an arm tied behind your back. You need to avoid the impulsive decisions. And a lot of times I find that impulsive decisions are driven off of too little information. So now we get to learn the dome. This is what I want you to do. I want you to learn the dome. And we will get more into this in just a little bit here. So I just want to bring this up initially. So these are a couple of domes here. This is TD Ameritrade Active Trader on the right side. This is Ninja Trader in the middle here. So these are known as a ladder or depth of market. So you can see why it's called depth of market is you can see how many offers are sitting up here above the price. You can see how many bids are sitting here below the price. Offers, bids. It's the same thing. It's the same. You'll see the same structure. Buy, sell. Bid size, ask size. Buy orders, sell orders. So if you put in a buy order, it'll show up here. If you put in the sell order, it'll show up here. They're all pretty much the same to some extent, although what I found is that certain domes are better than others when it comes to this. So in other words, I remember, and I don't know if this is still the same way, but some brands of domes, when I first started trading these a long time ago, it depended on whether you used a left click or a right click to place the order. If you placed a left click, it would put in a stop order. If you put in a limit order. If you put in a right click, it would put in a stop order, and you had to know which one was where. Otherwise, you'd be immediately filled when you didn't want to. And so it was very difficult. Now, what I've noticed about the active trader for Thinkorswim is it's pretty much, I want to be cautious here. I don't want to imply anything here, but it's pretty much idiot proof. It really is very easy to use. So in other words, if I click down here, if I left click down here, I'm going to put in a limit order. And I will get into the different types of limit and stop orders in just a minute. But this one it's almost impossible to take a wrong fill on this. It's almost impossible to put a wrong fill into the active trader. So you've got to learn the dome. That's one of your assignments here. So there's 4 types of dome orders. 4 types of dome orders. Now, here's the current price. This is where the price is right now. Eric has a tea time. Awesome. Awesome. I am jealous. It's still too cold to play here. So buy limit is always going to, let's start with the buy side. So we want to go long. The buy limit is always going to be below the current price. A buy stop is going to be above the current price. Now, when would you use which? A buy limit is going to be used if you're doing something like this, if you're taking a pullback entry. Or if you just want to get in at that specific price, then you try to enter through a buy limit like this. You're either going to just click on the price like bam, like enter me right now, try to get a buy limit. The risk there is that the price runs away from you and then you end up chasing it. Okay, so buy limit is either the price coming down, so maybe I can put something like here, the price comes down, dink, and fills me in a buy limit. Okay, a buy stop on the other side is when you have a trend and you want to take yourself into a trend, is a buy stop. So what I can do is I can do a buy stop that says, if the price trades above this, then just take me into this. Take me into this trend, enter me. Now, anytime you have a buy stop, this is a market order. This is a market order, and you will be filled at whatever the market is at that given second. That is a market order. You can incur slippage on a market order. You should not incur slippage on a limit order. Okay, again, two ways to get in: buy a limit, generally on a pullback, or enter right now. Buy stop is take me into the trend. Take me into the trend. Now let's look at the other side here. Sell limit goes above the current price. It's the opposite, the polar opposite of the buy limit. It always goes above the price. Sell limit says, I want to enter short, but I don't want to enter any lower than my limit price up here. So this is typically for something where you have price pulling back, entering a limit order up here, and then falling down. So a pullback is usually where you're using your limits. There's also the sell stop, which is what I will do. I will use a sell stop if I want to enter as the price starts to fall into a downtrend. So if I say take me into that downtrend, I will use a sell stop. I can incur slippage on these. This is a market order. So market orders, sometimes I will incur maybe a tick or two of slippage on these, which I'm okay with, because if I have to enter through a limit order, the limit may not be filled. I may have to chase this. I may have to chase this somewhat. So any viable futures trading system must include a way to get simulated live market data via replay to allow you to get more cycles of repetition after hours. So repetition is the mother of skill. We're going to talk about replays. In fact, I'm going to show a couple of replay systems later on today. So no matter how much real estate you think you have, you'll want more. So this is my current system right now. These are a couple of 24. These are a couple of 24 monitors, and this is the Dell setup that I have. What I like about the Dell setup is that it's got 4 virtual monitors. And what you can also do is you can take any one of these and say, display the entire screen on this one monitor. So in other words, I can take what's on this screen or any one of these and say display it over the entire monitor, so blow it up super big. I haven't really found a use for that except for like if I'm playing World of Tanks or something like that. Quite honestly, it makes the chart way too big. So it's much more useful just to keep it in Foursquare like that. But it's a very efficient format for not wasting a whole lot of space with bezels and things like that. And that doesn't count the other 4 monitors I've got off to my right-hand side, which are basically what happens is when I decommission a workstation, I'll keep the monitors with it, and I'll find some kind of use to monitor some other market with it. So yeah, I think the big monitor will do 4K. I think it will do 4K, but I mean we're only using 1080p with these right now. So this is what I will typically use for this. So I'll look at my main. This is what I'm doing here, and I'll show you guys. This is my main like entry chart. This will be like my 5x chart. This will be the 25x. This will be the dome that I enter off of. This is where you guys are talking right now. These are my market internals. So I've got, but no matter how much you think you need, what is that? Parkinson's law, work expands to fill the time available until a deadline. This is kind of the same thing. It's the same application of Parkinson's law. No matter how many screens you have, you'll find a way to use all of them. Now, memory and CPU, if your needs are complex, remember I was talking earlier about the fact that like in the old days when I was trying to run lots of different screens on, even 2 screens, I could barely keep, the video cards could barely keep up with the data being displayed. They would barely keep up. And again, that's where the technical system, These days, not so much. The video cards are so good, the CPUs are so good that it doesn't phase this thing in the least. So I've also seen high-end Mac systems do very well using virtual machines. So Mac systems are particularly good at becoming a virtual machine and running a Windows instance on it. That is, this is a 43-inch Dell. It's a 43-inch Dell. I think it's, yeah, I think it's 43 because it's 4 by 21. So the basics are important here. So you got to have stable power. You got to have power backup if you can help it. Stable internet. So some people have more than one provider. Connection diversity and all the other items that we take for granted until they don't work. So it's important to have a backup plan in place in case you lose connectivity in the middle of a trade. What are you going to do? Okay. Any questions on gear and setup? Hopefully there's not too many on that. I don't, again, I don't want to major in minor things today. Let's save our time for the strategy. Yeah, Thinkorswim does run very well in Mac OS. Yeah, Stardust, one workstation runs all 6 screens. That's correct. Which market internals do I look at while trading the futures? I look at the 80 SPD, I look at the cumulative tick, I look at the actual NYSE tick. That's usually enough. That's usually enough. Do I use a UPS? Yes, I have 2 UPS systems here. I have not found the need to get 2 providers yet in terms of internet, so I've been very lucky with this area here. It's the service is particularly good. David is asking, are my futures trades with NinjaTrader or Thinkorswim? Right now I'm using the Thinkorswim Active Trader to enter the futures trades. I will use the Ninja to chart them and to do replay. Yeah, John, John caught the Chewbacca name in there. Yeah, John, every computer I have has got some kind of Star Wars reference to it. So I've all my CPUs are named like Anakin or Qui-Gon Jinn or Chewbacca, Darth, those kind of things. So it's easy because all my kids have got similar names to their computers as well too. It just keeps them separate. Is iPhone acceptable backup? Yeah, I have used the tethering, so I can use phone tethering as long as you can get a decent signal off of there. You can use that as a backup. Do I have T1 lines? No, T1 lines are T1's a 1.544 megabits per second. That's not going to cut it. I've got a gig here. I've got a gig of speed. I don't need all of that speed, but it helps with the broadcast, certainly. Okay, how about RAM on the machine? RAM on the machine, I believe I have 32 gig right now. Do I drive all the monitors off the same PC? Yeah, Tony, for the 6 panels that you saw in here, which is the 3 monitor 6 panels, I drive them all off the same workstation. There are two video cards on this. Satellite is a no-go. Satellite is a no-go because of this reason. If you're talking satellite has got to go up and down, and the latency on here is, last time I looked, anywhere from a second to second and a half. And so the upload, I think that the upload is often terrestrial, like a phone line or something like that, but Earth to Bird, you're losing a second and a half on here. I don't know how you can get the correct orders in play when you have that much latency. Multiple graphics cards, that is correct. Okay, so let's move on here. Let's go into our trading niche. Let's go into our trading niche. How do we define a trading niche? So I've made this point earlier that most retail traders are too busy becoming a jack of all trades. they end up becoming a master of none. They try everything in the hopes that something will work. So most professional traders prosecute and own one main trading niche. Now, that doesn't mean that down the road they can't trade more than one thing. I mean, I've got a couple of niches myself between selling options and buying options, things like that. I mean, those are what I consider to be a niche, but I've been doing this long enough that I built up one niche at a time. So if you're trying to work at something like this, if this is important to you, then you've got to really focus on this. You have to own one trading niche if you want to make dramatic progress. So this requires you to focus on one instrument with one setup using the framework that you set up based on your business and your trading plans that you journal and inspect with detail on a constant basis. Finding your niche is simply a matter of finding the instrument or strategy or setup that gives you the rage to master, that's another Brett Steenbarger term, and allows you to wait on it. So this, I think this is the best analogy I can think of for trading, is that you got to be that dude sitting up on the tree stand up there. You're sitting on a tree stand, sitting there waiting for a deer to wander into your field of view. And you may sit up there all day long and freeze. I don't do this. I don't deer hunt, but I know of how to do this. You basically climb up there, sit up there all day, try not to be smelled, and then shoot whatever wanders into your field of view. Whereas most traders do the exact opposite. They're wandering out in the fields, they're blazing away at everything that moves. And this is what we do. We just hope we hit something, don't we? So how do you know what your special niche is? Which comes first, right? The chicken or the egg? You might need to spend some discovery time looking for it. So here's what Tony does. Tony is our resident NQ expert at TheoTrade. He uses a 2-minute chart. So here's a 2-minute chart up here. And he trades off of horizontal price levels. Do you see any studies on here? Well, he's got the VWAP. That's about it. That's all he uses on here. Everything is just a 2-minute bar. The only studies that he's actually got on here are horizontal price levels. So that's not exactly a technical trading system. It would probably be quite simple for most PCs to be able to deliver something like this, where I have to be a little bit more complicated with the way, because I have a different need, a different structure, what I'm looking for. So I use what are called tick charts on multiple time frames to look for swings that I can enter early and trade with the resulting trend. So I get asked all the time, how do I find my niche? You have to find a style of trading that fascinates you. You must attain the rage to master it. Again, Brett Steenbarger. Normally a niche starts from inspiration from somebody else who has already attained success with a strategy. This is just the starting point, though. You've got to make it yours. If you do not internalize the strategy, your trading mindset will act like a ball and chain and will prevent your success. Do you guys ever feel like this? Like you know that you haven't done the work and you're sort of hoping that you can succeed, and then if you don't succeed, you sort of figure like, well, yeah, I knew it all the time. You know if you haven't done the work with it, right? You can't just stumble into trading. So if you're numbers oriented, find a number strategy. If you like, find something where you could trade like a quant. Follow Don if you're numbers oriented. If you're visually oriented, find a pattern-based strategy. Find something where you can make decisions based on what you see with your eye. Knowing yourself and being honest will speed up the process. Don't try to be something that you're not. And this is Curly's Law. Find your one thing. If you guys haven't seen this movie before, City Slickers, there's a great scene in the movie where Billy Crystal and Jack Palance get together and he says, how come you're so good at what you do? And Jack Palance says, you got to find your one thing. That's what you got to figure out. And everybody needs to find their one thing, and that's really all you need to do. And when it comes to trading, you can be successful with just one thing. You've got to find your one niche. And guess what? It's going to be different for Brett versus Dingo versus John and Stardust and Naomi and Sheriff and Brett and Clyde are all going to have a different niche. You're all going to be different in terms of what makes sense to you. So you can't just bolt yourself onto somebody else and say, well, I'm going to follow this person. You got to find that niche. You got to basically develop it from within. Okay, any questions before we move on to the next section there? Any questions before we move on to the next section? This was about finding your niche. Skilled hunters don't shoot at anything that comes by. Okay, so let's move on here then. No questions. Now we get into the meat of the matter here. This is where I get into more of the actual trading stuff. So pay attention here. This is where the guts of the system come out. So stage one trading is for R&D. It's where you develop your trading system. Ideally, you build and test this on paper or simulated trading interfaces. I don't want you guys to be building stuff with your trading capital. Now, if you've been trading for a number of years, if you get it, if you understand it, if the risk of very small positions is not going to bother you, then you could certainly do this with limited capital. But I'm trying to save you some money up front. Trading sim does not truly replicate what you go through live. But there's nothing that says that you can't do sim just to understand the characteristics of the system. Does it work? Does it have an edge? Does your system have an edge? So if you can't make this work in sim or simulated trading or paper money or whatever you want to call it, it's not going to do any better in live trading. So this is where I will look to make a specific profit factor before I earn the right to trade the strategy live in stage two. So I'm going to show you my current trading plan here. So my current trading plan, and this is on the YM. So what I'm looking for, I want to create an intraday edge with a YM. And I'm going to look for 3 different types of days here. Trend day is where we have a significant move. We don't see these that often. So a trend day will start, here's the opening bell, and all of a sudden it just takes off and it's just it's gone. Or we'll see other days lately where we get an initial fake move and then boom, the drop, it just completely, the trapdoor opens up and we see a big red candle for the day. We don't see trend days that often. We do see more range days where the price just sort of ranges around, or actually what we see is more of a case of a hybrid. We'll talk about these in a little bit, where we'll see a fair amount of movement during the day. Overall, it's a larger time frame range day. And these are the days we want to really watch for, because this is where we have tremendous opportunity. So I've got 2 entries that I will show you guys in a little bit here. One is called the trap entry. In fact, I did a whole class on the trap entry not too long ago on what the trap entry is. And just to give you a visual for that, a trap entry is going to be where we have something like this, where we have an existing downtrend in place like this. And then we're going to find the first entry on board as the price breaks this trend line. Not only breaks this trend line and starts to, it throws off a higher low here, higher high. This is usually where we get too many people entering too short, too late in the party here. And we get a nice squeeze to the upside at the very least. We usually get very violent price action coming out of these. This is what I call a trap. It's a trap, right? So the trap entry is one of them. The other one is the hook entry. I'll show these in detail in just a minute here. And then position defense, I will go into position defense in just a minute with a trailing stop and an OCO bracket order. So we'll get into that as well too. So Fear not, we will get into the details. And this is how I set my risk on the trade, is approximately ATR divided by 10. Approximately ATR divided by 10. But it needs to be within reason. Within reason. You know, if we have this huge ATR, I may switch over to what I call the Slim Pickens setup, which I'll talk about in just a minute here. So I use this notion called fractal time frame charts, so fractal energy trading. This is where I will use multiple time frames. So this is my 1x or 200 tick, and also what I call my signal chart. This is where I will take signals off of the trade. These are my entry signals come off of this chart. From here I have two anchor charts. Each of these are separated by 5x in time frame. Now why tick charts versus time frame charts? It doesn't matter. You can use time charts as well too. I just like the look and how tick charts pop the trends, how they show the higher highs and higher lows and the price pivots on here. Okay, so again, signal chart. Here's signal chart. Here's the first anchor chart. Here's the second anchor chart. And I'll explain how I use these in just a second. ATR is average true range. Average true range. That's how much on average it's moving during the day. So the larger time frame charts are anchor charts that are used to evaluate trend or energy. And I'll show you how I use those. So I think everybody would agree it's easier to float downstream versus paddle upstream. So if you're going to go somewhere in a canoe, you'd want to go downstream, right? You want to be put in upstream and then float downstream and be picked up downstream. I think everybody intuitively understands that. And this is what I want you to do when you're trading as well. You want to be going with the flow of the current, right? So I want to identify the best way to float downstream in a trade. And to me, the best way to do that is by going up to the larger time frame anchor chart. And I'll actually use Heikin-Ashi candles for that. I'll use Heikin-Ashi candles. So it's quite easy to set these up in just about every platform. And what they do is they give like a bar by bar description of which way the trend is going. It's a bar by bar description of which way the trend is going. So it's quite simple. You just look at this and all I want to do is I want to go in the direction of the anchor chart swing. The anchor chart swing. The anchor chart swing. Think of these as swings. Each one of them is a swing here. Up, down, and right now, currently, the current place on the hard right edge is this anchor chart is trending to the downside. So I want to look for a way to get on board to the downside based on a 25x anchor. Again, the reason that the terminology 25x means that this is 25 times bigger in time frame than the signal chart that I'm taking the trades off of. So now what I'll do is I'll go down to the signal chart. This is the signal chart, which in this case is the 200 tick. You can just barely see it up here, the 200 tick signal chart. And this is where I'm going to get my most accurate entry. This is where I get my most accurate entry. This happens to be a hook entry on the RSI Laguerre, the RSI Laguerre study. So we're taking this off the signal chart. This is the entry point here, and then in we go. Remember, the overall trend was still heading to the downside, yes? And we're just looking for a better way, a more accurate way to enter. This is why we use a technical system. So this is a hook entry, which we'll discuss in a minute in more detail. So let's get into the two entries again. Here's the trap. The trap is where we have a current, an existing, it can be either an uptrend or a downtrend, but I want to see an established trend that's got a good, visible trend line attached to that. So an existing trend. And then sometimes what you'll see is you'll see divergence. You'll see bullish divergence showing up on the internals. So in other words, you'll start to see the tick coming up. You'll see the cumulative ticks coming up. You'll see the AD starting to perk up a little bit, you'll usually see the market internal start to turn just a little bit ahead of time. Just a little bit ahead of time. But notice this. This is Dow Theory 101, guys. Lower highs, lower lows. Lower highs, lower lows. Lower high, breaking the trend line. Higher low, higher high. There's the change in polarity right there. So I'm catching this thing, and this is where I'll use a buy stop entry. Remember we talked about the buy stop entries on the dome. I will use a buy stop entry right there. I will take myself into that new uptrend. I won't chase it. I'll simply put the buy stop entry at a place where I would be filled, and I'll say, take me in. Take me into this trade. Now the anchor chart, Heiken Ashy candle, will flip the exact moment that this occurs. So I have to anticipate this trade. And this is what's difficult for a lot of newer traders, is that you haven't gone through enough experience watching this to anticipate. You're more in reactive mode. You've more noticed the trade flipping somewhere up in this area here. Oh, it's going higher now. That's because you're not paying attention. You got to really pay attention. This is why I'm saying you have to really focus on what your edge is, and you have to really understand what's happening here. Understand that this is lower highs and lower lows. Don't go to sleep. And ask yourself, what would this have to do to change polarity? Well, it would have to print a higher low, and then it would subsequently have to turn around and print a higher high here at this point. And now we have a change in polarity back to an uptrend. This is stuff that I talk about every single day in the chat room. Every single session that I go over in the chat room, I'm walking you guys through how to identify these things. Look, it did take me a while to sort of pick this up, but I think that most people can pick this up much faster. So this is a very accurate way of identifying. This is not any kind of impulsive. You're catching the very first entry. You're catching the very first entry. There's no indicator that's going to get you in any faster than price action. This is where Tony and I are simpatico with believing that price action is the very most durable, fastest way, is the only thing that sticks around for any length of time, because price action will never lie to you. Whereas indicators come and indicators go, price action will always be there. So that is the trap entry. I love that entry. It's the very first one in the trend. Okay, so there we go. Now we're going to talk about the hook entry. The hook entry is what I usually call the second entry onto a trend. The second entry is the hook entry. So what we're looking for is the actual hook. Now we've already moved into an uptrend, right? We've already moved into an uptrend. We're starting to move into an uptrend. The 25x anchor chart is now flipped to green. So it's already said, hey, you should consider going long here at this point. Now what I'm looking for is the next entry onto here. I'm looking for the next train car that can accommodate me, that I can grab a handle and jump onto this dude. And this is the RSI Laguerre hook. It's a very, very sensitive, responsive study. It's not like an oscillator, which is going to, or a stochastics or something like that, which is going to fire by the time that the price is up here. It's too late. You're talking about entries where you get just moments to decide whether or not you have enough edge to enter. Again, these are very rapid. That is the hook entry. And there's the entry point right there. Now there's filtering. Filtering is really what makes the big difference here between people that take a lot of trades and get kind of a low profit factor versus one that take few trades and are more efficient with what they do. So here's what I see. This is what I see every day in the market. I see people, okay, so here's a former downtrend, and all of a sudden it screams to the upside. And everybody wants to chase this up there. They see it running away, and they're like, stop, wait for me. I want to get on board long too. And then what does it do? It punishes them. It says, you are late, you're late, you're late, you're late, you're late. I'm going to stop you out. I'm going to stop you out. And so just when you think you've got something good, this is where you get beat up and stopped out. And I see this again and again and again. And so the same thing happens a few minutes later. It starts to rip to the upside again. And so the newer trader says, wait for me. I want to get on board. I want to get on board. So they get on board. And then the market says, you're too late, you're too late, you're too late. I'm going to stop you out. And this happens over and over and over again. Here we go again. All right, here we go. I'm going to the upside. And the newer trader says, get me on board. And the market says, you're too late, you're too late, you're too late. You waited too long. Stop you out. How can you avoid getting on board these things? Well, this is where filtering comes into play. Don't take entries in the direction of the 5x swing when you don't have enough gas in the tank. And this is what I will use. The yellow line here is the embedded fractal of the RSI Laguerre. So this also goes along with the fractal energy trading, which you guys got a copy of this course in the studies and everything. So when you have an energy level below 45, don't continue to press the case. You're in exhaustion down here. You're in exhaustion down here. So look at these places. Exhaustion. Don't chase the long there. Don't chase the long. This is what we all do. We chase after stuff like dogs chasing cars. Dogs chasing cars. We are reactive instead of anticipatory. We're reactive, and we're always going to lose edge when we do that. So I can create tools to help automate these decisions. So this is something else that I will include with today's materials. So let's look at the 25x swing. Let's look at the previous trade. If we do, let's actually, I'm gonna move this back to, this one here. So here's the trade. We have the 25x showing red, right? 25x showing red. So what we're going to do is we're going to grab this little spreadsheet tool, and we're going to say the 25x swing is now short. How's the energy on this? Well, I don't know. Let's take a look. We don't want to sign in here. Let's take a look. The energy is okay. The energy is okay. So we need to be trading in the short direction. Now, how's our 5x energy? I don't know. We don't have the chart up right now. Let's say it's okay. So our trade stance is still short. Okay, so now we move down to the 1x. Now we move down to the signal chart. Here's the signal chart. How's the energy on this guy? It looks pretty good. Let's wait for the hook on this. So are we above or below the 89? We are below the 89 moving average, which is the pink line there. So the trade stances, we're all go. All systems go. Opening range, we're trending below. It's a breakdown below there. We're in trending stance. So this is a tool that you can use to kind of keep your brain from overthinking the trade. So if you wanted to, you could actually put this into an automated system. I mean, you could actually do something like this. You could put it into an automated system. This is what we are, though. So again, that little decision spreadsheet will come with the materials for the class. Okay, let's catch up here. So there's filtering on the 5x. Here's the tools. Okay. So my rule summary, let's run through the rules really quick here. Trade in the direction of the anchor chart swing. Trade in the direction of the anchor chart swing. That one thing alone, if that's the only thing that you learn from today's class, is to trade in the direction of the anchor chart swing, that will save you so much money and frustration. It will simplify. You'll be going downstream instead of upstream. The first entry trigger is the trap. The second entry trigger is the RSI Laguerre hook. 5x filtering. Make sure there's enough gas in the tank to go in the direction that you want. Long above 89, short below 89. This is a very simple rule. Sometimes I break this. Always go for the very first or second entry. Avoid subsequent entries unless in massive trend mode. I'll show you this in just a minute here. So if 25x is an exhaustion, expect large chop. This is what we see all the time as well too. We see the anchor chart swing going straight up here, and then what's going to happen as it breaks into exhaustion, we anticipate the fact that it's going to break into some type of ugly range, and we may not be able to run anything within that. We may have to pull in our targets just to book some handles. Understand what's happening at the larger time frame. Price remains range bound inside the opening range. Expect range trading until it breaks. We'll get into the opening range in just a minute. Stage one. This is where you iterate, you track, you adjust over and over and over again. This is the batting cage in baseball. This is the driving range in golf. This is where you sit there and swing and swing and swing and swing and swing until you know what's going to happen when you make a backswing. This is where many traders make the mistake of ramping up to live capital too soon. Or they start with live capital and they try to learn this on the fly, which I think is a disaster because all of a sudden you find yourself trading not to lose instead of trading to win. Any questions on how to get into stage one, how to build a system? I've just showed you my system. I'm not suggesting it has to be your system, but I'm showing you the guts of what I do every day. Anybody have any questions on this? Have I tried combining this with Tony's system? Yeah. The problem is that we were confusing people because I'd get in the room and I'd say, be caution, guys, be careful, 5x exhaustion, and that would just confuse people. And then perhaps Tony was still taking the trade because it didn't go against his system, and people just were like, what are you guys doing? So I think you can use it if you want to. I just don't want to do it in the room. Ashada, I've noticed a zigzag line. How many swing points? I don't know. It doesn't really matter. It's irrelevant. Set the swing tool to the way that allows you to be able to pop the swings so that they stand out to your eye. The embedded green trend lines in your chart. So John, that's the same thing. That's the swing tool. I could show you the swing tool later on at the end of today's. So remind me when we get into final Q&A, I'll show you how to set the swing tool. David, what signal chart tick values do you currently use for YM and NQ and stuff like that? So I'm still using, and this is probably wrong, probably needs to be a little higher, but NQ I'm still using 275, and that's the same as when it was in lower volatility days, so probably needs to go higher than that, but I haven't traded the NQ now for a couple of months. YM I'm currently running at 200 tick. And that seems to be about right for today's volatility. ES, I generally run 400 to 500 right now. But again, I'm just watching it. I don't trade it. And the RTY, I'm doing anywhere from 133 to 200. It's just been more erratic lately. So this is what I'm doing right now. What I'm trading live is YM 200 tick on the signal chart. Heikin-Ashi candles on, I will explain the opening range shortly. Heikin-Ashi candles on signal chart as well. No, I don't need those. MACD, I don't need it. Will I cover the rollover week quagmire, how it affects the little retailer? I don't believe it affects the little retailer at all. I don't believe there's no big deal. There's no big deal. Are TV monitors a distraction, or do you need live feed for possible trading? James, I stopped watching CNBC about 10 years ago because originally, and I write about this in my book too, because when I was first working, I would come home and I would get all excited. I'd set up my workstation and TV and be listening to CNBC and Bloomberg and all this other stuff and trading off the news, and it was a complete disaster. I've learned to tune out the news, stay away from the news. The news is commonly available information that the market's already discounted in anyway. It is the surest way to destroy your trading account is to listen to the news. Gerald, could you use the trap and hook with weekly options, say on Friday? Sure you could. Could we upload your chart setups on NinjaTrader? Reiner, I have no idea how to share charts on Ninja. We do have the study available. The RSI Laguerre study is available on Ninja through TheoTrade. Does it work in higher time frames? Everything that I talk about today works in higher time frames. You can use this on the weekly and the daily chart. You can use this on the 60-minute chart as a signal chart if you want to. That's the thing with fractal energy trading, is this works the same intraday as it does the same thing that you guys see me doing here with day trading. Intraday day trading is the same thing that I do on the daily chart for longer term swing trades. You only have to learn one system for everything that you do. Okay, so the swing tool, guys, just remind me at the end of today's session when we go to the final Q&A in about an hour or so, remind me to show you the swing tool. How do ticks compare to time? They do not. There is no correlation between tick charts and time charts. Zero. So don't try to make a linear correlation between, hey, if I'm trading off a 2-minute chart, how many ticks is that? There is no correlation. That means that you haven't traded ticks before, because tick charts, you get a 1 tick every time that you see a certain number of transactions. Or I'm sorry, a candle. Candles printed based on these number of transactions. That is irrespective of time. It has no correlation to time. What you'll see is that when we have a lot of volume, you'll see a tremendous number of swings in tick charts, like this. When we have a tremendous amount of volume, you see a lot of swings in tick charts. Whereas in time charts, that may only be one big, huge candle that's contained. All of that action is contained within one candle. And so I think if you like to read price action like I do, then understanding how to use tick charts can be a big advantage for you. David, there's no particular reason that I've stayed away from NQ. The only reason that I've stayed away from NQ is because of the confusion in the room. I love the NQ just as much as the Y. I believe the YM and the NQ are interchangeable. So I just don't want to confuse people in the room if I start talking about NQ trades and we have Tony with NQ trades, and then people get confused like, well, what are you guys doing? So I've decided to just specialize in the YM for right now. I don't really care. Between the two, I think it's just as easy to trade as the NQ. The RSI Laguerre is totally different from the standard RSI. Not even the same. Arthur, so when a news event changes the direction suddenly, what am I doing in actual trade since you're unaware of the news? Well, all of a sudden I see the price moving. And so typically, again, Arthur, I don't want to be trading all day long. I want to look for a very small window of time. I want to look for a very small window of time because to me, time equates to risk. I want to trade as hard as I can or as focused as I can during that window of time, execute my plan, get my fair share, get the hell out, and then go to cash. And then let the other guy worry about news reactions and stuff like that. Anybody that trades the news is trading the news after the fact, and is very, very difficult to find any kind of an edge to that. Range bars, Stuart's asking about range bars. Range bars are interesting to me. I have not traded those yet, but I think that they might have. I've seen really nice looking range bars before, and I think that they do hold some promise. I just haven't invested the time into them yet. So good question, Stuart. Chris, do I still recommend the 10,000 tick NQ anchor from your older? Yeah, sure. The 10,000 tick versus the 400 tick. So that's for the intraday options thing, right? That's the intraday options thing. But that's still exactly what we're talking about here. But I had to go to a larger time frame for that because you want to have somewhat slower. I mean, that's like one signal a day kind of thing for the intraday options trade. What's the longest I've stayed in the trade? Maybe an hour. Edward, okay, this is the last question I'll take on this. On the trap trade, the RSI Laguerre was already in the red. Do you take that into consideration? No. If I'm okay, yeah, oof. I don't want to bring up the old chart because it's just going to confuse people. But if I'm looking at a trap entry, I pay no consideration to the value of the RSI Laguerre. So that's a great question here. Okay, let's move on here. I'm going to get to the next section here if I can, and then we'll take a next bio break. So let's learn how to adjust to different markets. There's two levels of adjustments here. We need to make two levels of adjustments. Hold on a second here. I think we're still coming in on time. We're still on time. So what is the current character of the market? What's the daily range? What's the trend over market? These are the macros. These are the macro parts of the. So this is going to affect stops and targets. And if you guys have never heard of this, there's four different types of market character. There's quiet and trending. This is where we get these little tiny bars, little pullbacks and sort of thing. This is the 2016, 2017 kind of market. Then that always transitions into sideways and volatile. This is what we're in right now. That will transition into one of two things. That will transition back either into quiet and trending again, or depending on who you ask, this will transition into trending and volatile like this. So it's quite exciting to see what might happen from this coming up. Now there's a fourth one, which is quiet and sideways, which we hardly ever see. If you want to see something like that, go back to the summer of 2015 for about a couple of months there, right before it released to the downside. But generally, this is what we're seeing is 80% of the time we'll see quiet and trending. Then magically, sideways and volatile will appear at some point, just when at least everyone expects it. And then we'll go back into one of two ways from here. And then it repeats again. It repeats. So we just keep going through these same cycles all the time. Obviously, trading during this period here is going to be totally different versus trading through this period here. And we need to be aware of those and adapt accordingly to that. It will also affect how the price moves intraday. We also need to adjust to what is happening intraday. So macro and then micro. Macro and micro. So we will see trend days and range days. Trend days and range days. Okay, trend days and range days. So trend days are going to be days like where we'll start out and all of a sudden, boom, we're gone. It's gone, and it's leaving everybody behind. This is we'll see these professional gaps, and then the rest of the day is nothing. We used to see this quite a bit in 2016, 2017, where, like maybe one out of every 20 days, we'd see one of these big trend days, and it's just gone. And you have maybe one chance to get on this thing, and then the train's left the station. Range days where it just sits there and does nothing like this. The majority are a hybrid between the two. We might get a little bit of a trend, and then it pulls down back into a range, and those are actually, that's okay. The hybrids are good. So we make these adjustments from a top-down perspective. I will look at the macro first and then focus on the micro. Setting the macro, ATR, remember we talked about this before, the average true range. Average true range. You guys can Google this. You can figure out what it is, but basically it's saying how much range do we have. And look at this. Here's a quiet and trending. Quiet and trending, we had a Dow, this is the Dow here, was basically running about 100 points a day. And then during February of, got to say that right, February of 2018, we had it up to 600 points a day, so 6 times larger. You have to adapt to that. You can't use the same stops and targets in this kind of stuff that you could in this sort of stuff. You have to change. You have to adapt. You have to change your stripes. You have to change your stripes. So market character adjustments, quiet trending charts, or markets have less trading range. Volatile corrective markets will have much more range. You cannot trade the same in quiet markets as you can in super volatile ones. During quiet and trending markets, there might only be one main move per day. I have to stay focused here. I saw a lot of people getting in trouble with this sort of thing. That they'd lose focus in the first 30 minutes, they'd lose the opportunity, right? So you get this big move in the first few minutes, and then the rest of the day just kind of flatlines like an EKG. And so you're chasing garbage in here. You're chasing after crap and garbage in this stuff. And you're getting chopped around and chopped out and getting frustrated because you lost focus in that first 30 minutes. So during volatile corrective markets, this is golden time. This is where you get massive movements all day long. Right now, we're still kind of in this sweet spot, guys. I mean, this is good stuff right now. So it's more important that I define what is done for the day. You have got to do this. You've got to define what you determine is done for the day. Otherwise, you'll end up you're a slave to the monitor. It's not healthy for you either. So determine way up front where you will say, look, I'm done. I'm done. I'm going to walk away. I'm going to back away from the from the workstation slowly. I'm not going to turn my back to it. You can't stay focused for too long, right? The conscious brain only retains focus for 10 seconds at a time. How can you possibly do this all day long? So to help make intraday, remember I talked about macro, now let's go to micro. This is intraday stuff. I will look at the opening range, and there's even studies within like Thinkorswim here. I can just auto map the opening range. And this is quite nice to do this. So it sets up the opening range for the first 30 minutes, and then it gives me an anchor point to say, all right, is this thing trending or not? Is it trending or not? Okay. So here's another example where we're trading within the opening range, and then we start to see the market starting to move from range contraction, moves into range expansion. Here comes the trend. We see a lot of this today. So once the price breaks past the opening range, it turns into a trend day. And then it moves into another range up here. So this is where a lot of traders will say, hey, it's a trend day. And they'll look for the first entry on here, and then they get just beat up because they went to sleep on this. They went to sleep. So trading is so much about preparation, putting yourself in a position of success, and anticipating things and not just reacting to them way after the fact. Range expansion will only go so far before it turns into the next range contraction. So adjusting to market character intraday. I always track how price treats the opening range. Always track that. A pure range day will almost trade entirely within the opening range. We don't see that many of them. They're somewhat rare because all that compression, think of this. When you see a range day like this, just compression, think of a spring being wound up tighter and tighter and tighter and tighter until it won't stay in your hand anymore. This is typically where we see the next big trend coming out of there. So range days like this almost always lead to the next trend, and they don't always wait for the entire day to do that. So while it's within the opening range, assume that it's range bound. Is it big enough to achieve your targets within the opening range, or is it too tight? So in other words, if you have an opening range that's like this big, and maybe that opening range is only 20 handles wide on the YM. And what if you're entering here and you're looking for maybe 10 points of risk out and then 50 points on your second target? Is that realistic? Well, only if this breaks out. Otherwise, it's just going to stay within there and just beat you up. So while it's in the range, assume that it's range bound. So most true trend days start early. They do start early. They usually, and this is how I normally see them. Most trend days will start like right out of the gate, all of a sudden, boom. Right after the opening bell, it just takes off, and you got to be ready. Or the other way that I see is in the other direction, we'll see an initial move up to pull as many bulls as possible into this, and then the trap door opens up. Usually if I'm seeing a trend day to the downside, it will start off with a positive pop up there. And for years we saw trend days to the upside start with a little negative futures, little pre-market gap to the downside, and then it would just get faded. So that's how they work. So it can be very frustrating if you miss the train. This normally leads to over trading in the afternoon. These days are somewhat more rare now. We don't see as many of these big trend days because every day is range bound. Okay, so we're going to take questions here, and then I'm going to do a buyer break right after that. So we'll take a couple of minutes of questions, and then we got to stay on time here because it's going to be a race to the finish as usual. Okay, any questions for this section here? Manu, is there a resources session on Theo to understand dollar cost versus handles? I'm always assuming that one contract is costing me $10,000 of initial margin, even though that's not necessarily the case, Manu. So to me, even though if you can get intraday margin way less than that, I'm still assuming $10,000 per contract. Daniel, what is the name of the opening range tool in Thinkorswim? I don't know, but we've got it listed in our shared charts, scans, and studies page. So if you look under the Doc Severson section in the shared charts, scans, and studies page, you can find that study. Opening range is 30 minutes after the open. Any benefit to monkey bars? I don't know. I don't use monkey bars, Doug. That would be a better question for Professor Jeff Bierman. What is the opening range the first 30 minutes? George, do I trade breakouts in addition to the trap and the RSI trades? Breakouts are typically something like this. So breakouts, the way I would define a breakout is like the range is set, the range is set, the range is set, and then you're taking the actual breakout from the range like here. I do not take those. I do not take those. What I will take is I will take the first RSI pullback against a known level. So I'll look for that entry right there. But I don't chase breakouts unless it becomes a trap entry by itself. Brett, at what point is it too late once a trend is established? At what point is it too late? When you have 5x exhaustion. 5x exhaustion is too late. Arthur, you enter early and long, you get stopped out on the slide. You may take the slide in the trend change. Okay, I don't know what that means. Yeah, the notional value, Ernie, is quite a bit bigger, but I'm just looking at the margin. Ashada, you've mentioned in the past you would avoid trading around the open, but now you would trade around the open. It can be rewarding. Please share our wisdom in trading the open. Okay, so what I used to do, Ashada, and you're very correct at that, what I used to do like a year or two ago was I would let the opening range play out, and then I would trade in the direction of the opening range. Tell you what, now these guys, some of the best movement is coming in the first 30 minutes. And if you're confident and if you have a good read on the trade, I can get done in the first 15 minutes if I can. And I will try to do that. So I've changed my approach on there. I used to be much more conservative, and then what I found was that I was missing out too much opportunity. Actually, some of the better moves were actually in this first 30 minutes. Michael, what market internals do I watch for a clue in the market direction? I will look for divergences in the tick. I will look for divergences in the ADS-PD, and that's pretty much it. That's pretty much it. I'm really, really looking at price, Michael. Price overrules everything. Okay, one more question, and then we're going to be taking a bio break here. Ash, is pattern day trading applies to futures? No. No, it does not. And we discussed that on one of the first slides, is that they're ruled by the CFTC and NFA, and that pattern day trading does not apply. Okay, guys, let's see. We're going to get back here. Let's take a break here. We're going to get back here at, and let's see, 11:30. 11:30, which is just a few minutes. Okay, so we're going to be returning at 11:30. I'll see you guys in a minute. I'm going to shut the stream off and start it again.